Taiwanese index is down 0.2% as we speak. Hang Seng is down 1.3%.
The deal's worth around about 3 billion francs. In terms of the shares that shareholders are getting, it's going to be value Credit Suisse at around about 76 a share.
Well, the NCLT has cleared, the merger between the two lenders, that is SDFC Bank and SDFC Limited.
Adani Enterprises has put on hold a 34,900 crore petrochemical project.
Indian markets not looking good. 79, 80 points lower now on the Nifty, almost 90 points.
The fact that some of the companies are incredibly profitable.
The company has got an order for 2 container vessels.
CLS in its notes says that how these city gas distribution companies tend to benefit from falling spot LNG prices.
The Nifty's breached the 17,000 handle.
There was a lot of delay in these negotiations. They were going on for over 8 months. And as a result of which, there was some disagreement over the deal structure as well.
We did not initiate discussions. We believe that this transaction is financially attractive for UBS shareholders.
The estimate for SVB's exposure is just 10 to 20 basis points for companies like TCS, Infosys, LTIM.
The mid-cap side of things, they continue to at least underperform the benchmark, so that index is down 1.5%.
That was the day so far. Hello and welcome to Closing Bell, live from the CNBC-TV18 Motilal Oswal studio. I am Reema Tendulkar. With me is Surbhi Upadhyay, and we've got Nigel D'Souza in the newsroom. We are missing Prashant today on the show. Well, it's been a rough day, right, for our markets. It's just that perhaps in the last half an hour, we could heave a sigh of relief because markets are attempting a bit of a pullback. From the day's low, which is about 16,825.27, the markets have rallied close to about 100 odd points. There you can see 2 p.m. The low, of course, was closer to 1:30 p.m. But from 2 p.m. to 2:30 p.m., you are seeing a credible bounce in the markets. And from the day's low, it's nearly a 100-point recovery. The question is, will this sustain? One of the other reasons why it could is because the handle that it breached, which is 16,850, is technically seen as an important support level. So a lot of effort is going to be put in by the bulls to hold on to that level. And that's what we've seen so far. Still, despite that recovery, markets are bleeding worldwide. So the relief over the deal stitched between Credit Suisse and UBS over the weekend has been short-lived. The relief over that deal has been short-lived. Global markets are under pressure. Back home in India, we've got a 1% knock right now on the benchmark indices. But pull up the early rates in the European markets and you would see that European indices there are extending their losses. So heavy selling pressure seen. The Dow futures too is currently down close to about 300 odd points. The mid-cap index is down 1 1/3. In terms of a percentage point, with the advanced decline ratio having close to about 2,300 stocks currently in the green. A quick word on the stocks which are aiding the pullback right now. It's many of the banking names. So pull up something like an Axis Bank and you would see a bit of an up move. SBI Life, Sun Pharma, HUL, so a few defensives as well. Throw them in. And these are some of the stocks which are aiding the recovery that is currently underway. But in the last couple of days, all the pullbacks have been sold into, right?
Reema, I guess, yeah. There are no easy answers, and these things don't wind down in a matter of a day or two, and we've seen that play out before. And right now, it's that uncertainty. So what's happening in Europe? It's all our cues are coming from there, right? So UBS shares were down about 12%. Now they're down about 8% as the market digests everything that was announced on Sunday. There's a lot of uncertainty about this whole AT1 bond issue. You're talking about a $17 billion hole. How will investors sort of close that, move on? How do they adjust their positions? These are things that are just going through the market, and obviously the uncertainty around what next from the US, given that there's been a lot of chatter about First Republic Bank in the US, and that was down about 30% on Friday. So have they found a solution there? What's going on? There's just way too much uncertainty weighing on the market's mind. For our market, it's important to note that that low of 16,847. Now, why do we keep repeating this number? This was a low that the market made on the 30th of September 2022. And the market turned from there. And, we had a couple of decent months till we ran into rough weather, obviously, at the start of 2023. So that low was breached once earlier, but not twice. At least I don't remember seeing it breached twice. So let's see. And now the market's attempting a bit of a pullback. Will be an interesting last 1 hour, to say the least, Nigel. But wow, can't keep your eyes off the screen even for a minute in a market like this.
Well, that's right. Select heavyweights have pulled back in the last 1 hour, so that's pretty good news. HUL, Kotak Mahindra Bank from the notable movers, and the big boy HDFC. You remember, that's a big weight on the index. When that's down close to 100%, it's putting some pressure. But we have seen a good recovery on a couple of these stocks, and that's what's leading this 100-point recovery. The day still belongs to the bears as of now, but the final hour has belonged to the bulls. So interesting to see how the last 50 minutes do pan out. The Nifty today hit its lowest levels we've seen all the way since 30th September 2022. The low today is around 16,828 odd. So that's the crucial near-term support zone now, that 16,800, 16,850, because from there we have been seeing for the last few sessions there is some buying that creeps in there. But you just pull up two options. One is the 16,900 call and the 16,900 put. Just pull both those two up for you. The premium on both of them is close to around 120 rupees, very approximately. So you plug in the numbers from around 16,900, you add around 120 points odd. Given that there is writing being seen at around the 16,900 odd level, and you deduct 120 points odd. So that gives you a bit of a range, 16,780 to around 17,020 on the upside. That's going to be the very crucial zone. But if someone is doing a straddle, where in fact you're writing both these two strikes, both the call as well as the put, then you're bracing for a broad 500-point range. That's 16,900 plus around 200 points on the upside. That's around 17,100. And on the downside, you're betting on that 16,700 odd level holding out. Good to see a bit of a pullback. Let's see whether or not we can end with a lower cut than what we started off with.
Oh, yes, absolutely. And I think a lot of cues will keep coming from the way a lot of these important asset classes are moving. I just want to place on the table two more cues. One is that there is overall global risk aversion and the money is moving away from equities into bonds. That's very clear in the manner in which two triggers are moving. One is the dollar. The dollar index is again spiking back to levels of around 104. So that's one thing to watch carefully. It's very volatile, the moves, but we are closer to 104 than where we were on, let's say, Thursday or Friday. Almost there practically. The other is the US 10-year yield, the benchmark that typically people gravitate to in times of uncertainty. So as money rushes into bonds, prices go higher, yields go down, and that yield is now at 3.33. So there's a substantial drop in yields also coming in. Both of them just giving us a sense, Rima, of the fear and the uncertainty that's still playing out. So let's see. I think, as Nigel said, if we can hold on to some sort of a pullback, reduce the fall, I think the bulls will just have to be happy with that, perhaps.
Let's find out if there is a trade brewing in all this volatility. So how should you position yourself in the last hour of trade? Mitesh Thakkar joins in with closing strategies. Mitesh, afternoon. Are you convinced about the pullback which is currently underway, and would you latch on to it? Is there a buy call right now?
Good afternoon. Not really convinced. In fact, in the morning I talked about buying around 16,825, and the logic was very similar to what Nigel was just highlighting. 16,800 is a good support area. 17,150, 120 remains a supply zone. So it's a 320, 350 point kind of a range. And therefore buying towards the lower end of the range was a good idea. But now I think now that we've already moved up about 100, 120 points, I'm not very inclined to take a long trade. In fact, if somebody has bought, good levels to take profits. More of the structure is on the weaker side, so I think eventually we'll break this level on the downside. But because of multiple reasons, there's a weekly average, there's a monthly average, and there's a gap over there which was made way back in September of 22, around the 16,750, 800 mark. I think you will see some, repeated throwbacks till the demand around these level exhausts, and then we'll see a breakdown. So I think for the timing, try to buy closer to 16,800 as much as you can, take a 50-60 point stop loss, and then look for a 100-120 kind of a bounce back. That trade may work out for 2-3 times before it eventually kind of the market eventually break on the downside. So till then, I think that's the approach which we're taking, either shorting at higher levels around closer to about 17,100 or buying around 16,820. Having said that, the stock calls that I have, AU Bank is a sell call. Disclaimer, we have some put options positions here. That's a sell with a stop at about 588 for targets of 540. And BPCL, and we had a buy for an IOC, and BPCL is a buy. Keep a stop at about levels of 352.5 and a target of around 375 can be looked at.
Okay, all right. Thanks for that, Mitesh. We will keep coming back to you. We'll need more advice and counsel as we navigate the next 1 hour, the last 1 hour of the day. By the way, before we kickstart it with our local guests here, let's also get you some important global opinion that we picked up during the course of the session today. This is Timothy Moe of Goldman Sachs talking about the kind of unprecedented or near unprecedented developments that we have seen in the last 24 hours.
The framework, which is helpful for investors, is that we need to think about things in terms of three shocks that have happened. Obviously, there's first and foremost, a financial stress shock, and this manifested then in an interest rate shock, and then that also likely has some sort of a growth shock. We've seen this shock in terms of broader financial conditions. We've also lowered our U.S. growth forecast by 30 basis points last week. Our U.S. economists did that because the smaller banks account for about half of the commercial industrial lending in the U.S., as well as real estate, both commercial and individual lending. So there's going to be some sort of a hit to growth. If we look at the actual linkages, they don't seem to be anywhere near as extensive as they were, for example, back in the taper tantrum period in 2013 or in 2018 when the Fed first started raising rates and there was another sell-off in the region, but also in the banks. If you look at the data trail that you can follow in terms of external balances, in terms of a variety of vulnerability indices, this is more for the broader economy than for the banks just themselves. But we've done some work on vulnerability indices, which look at short and long-term debt in terms of trade and capital flows and so forth. And overall, the level of vulnerability seems to be lower.
Okay, all right. The markets have recovered 100 points odd, but let's see whether or not we can extend from here. The Dow futures have seen a big recovery from the early morning lows, so that's important as well. I think last I checked, it was only around 80 points odd. Deepak Shenoy joins us as well. Hi, Deepak. Good afternoon. What are you making of trading action as of now? The banks, yet again, they are dragging. You saw a bit of a recovery a couple of sessions ago. But from the banking lot itself, anything that you would look to buy into? Because that's the one that's coming for the severe hit. Post the Adani crisis, then you have the global banking crisis as well. And that was supposed to be the space which offers the best earnings visibility. So what do you do out there?
So, Nigel, I think, banking-wise, the global financial crisis doesn't seem to have yet impacted us. We don't know whether there's going to be any level of contagion, specifically with respect to Credit Suisse, because it just happened and we don't know what the downstream impact of it yet is. But I would imagine India is largely safe from whatever's happening in the US. I think that stuff is going to get resolved fairly fast. So when you save that, I think in India, the larger banks and some of the private sector larger banks are actually quite attractive. We have some investments in ICICI and Kotak, and of course, the situation is fluid. So news, both bad and good, can come at any time. So a lot of these views might end up changing when the news comes. But I feel here, ICICI, HDFC, Kotak are at a much more reasonable valuation compared to earlier. Of course, compared to earlier, but not in general. I think there will be a banking recovery in the next 4 years. That should give reasonable returns from earnings, not so much as a recovery into high PE ratios, but earnings-wise, the banks have a much higher potential in the next 3 or 4 years compared to where they are right now. There's some mark-to-market losses in bonds. There is a bit more of NPAs that might come and hit their balance sheets in the later half of this year. So taking it easy, I would just say avoid leveraged financial players that are too small in terms of balance sheets and in terms of geographical areas of lending, because this is not going to be an easy time. When interest rates go up, their credit spreads will spike considerably.
Okay, so that's some advice on banks. Deepak, stay on. We have more questions for you. Two big sectors that have become a problem area for the market. One is banking. We've discussed that. The other is IT. Pull up some of the IT names even today, TCS, Infosys. Most of these stocks are down. And by the way, the month of March has been brutal for Indian IT stocks. We're talking about a 4.5% decline on the IT index itself, taking the total loss for the last 12 months, one rough year for IT, to as much as 20%. Rima, we're talking about a bear market for IT, right? 20% from the top is typically how we look at bear markets. But you tell us, there's so much of uncertainty. What are you picking up from the street? What lies ahead?
Well, the street is very worried about the BFSI, which is banking services and the insurance exposure of the IT companies. Now, BFSI is the largest revenue contributor to the IT companies, it approximately contributes anywhere between 30 to 35%. So for large cap names like an Infi and TCS, it's approximately 30%. And in the mid cap basket, it's names like Emphasis, which have a very high exposure. More than 50% of their revenues comes in from the financial space. Now let's talk about the possible impact. Now CLSA says there are three scenarios, right? The first scenario is that the crisis is very short-lived. We managed to stem any possibility of a contagion. Then the impact is only going to be on delayed decision-making by BFSI clients, and therefore the EPS impact, according to them, for large cap companies like TCS and Infi should be about 2 to 3%. The second scenario is that the crisis gets elongated, right? It's prolonged and much larger. And here now tech budgets get cut, which means the BFSI revenue itself starts getting impacted. And not just that, there was a spillover into the other sectors as well, something which had happened during the GFC crisis. In such a scenario, the EPS impact for larger companies could be 7 to 8%. The third scenario, according to them, is that this is a full-blown contagion. Credit risk goes through the roof. There is a large systemic bank which fails. CLSA says we're not penciling in such a scenario. There's a very low probability of that. So they're ignoring the third fearful, frightful scenario as of now. JP Morgan is saying that, again, the impact can be in multiple ways. One, there is a delay in deal ramp-ups. And two, there could be a delay in deal closures. All this will impact the BFSI spending for either 1 to 2 quarters or even going up to 1 year. So in such a case, they're saying, despite the fall that we've seen in the IT names, the current estimates, the EPS estimates, do not factor in the risk of a further slowdown in tech budgets, which is why they're still underweight on the IT pack. And remember, Indian IT, while it has seen a big correction in the month of March, year to date, it still outperformed the benchmark index by close to about 6% But I guess right now, it's just very blurry, very uncertain. Greater clarity is only going to be coming out during the Q4 budgets. Deepak, would you be worried that even if there is no full-blown contagion, no big bang fails, the base case scenario is that there is accelerated slowdown, which means the EPS estimates, the growth estimates of IT companies do come down compared to what the focus estimate was, say, 2 months ago?
So, Rima, I think the problem with IT is it's a little weird. The slowdown that we're seeing in the US is going to, or that we're looking at in the US, I think will actually result in more business for Indian banks. Though a little bit of the discretionary spending will come down, banks are going to face a substantially higher regulatory regime going forward, which means they're going to have to revamp their IT systems to be able to report a lot more to the regulator and a lot more frequently. And therefore, I think a lot of the business that will come will be non-discretionary in nature, which means they'll have to do it regardless of whether they like it or not. So I believe here that business flow will start after the regulatory changes come, which is probably to the mid of this year. And we're actually going to be likely to see more increases in order flows in 2023 itself. So while we have a small position in IT, I think I'm waiting for a lot of the news flow to start working in their favor. I don't think a lot of banks will go down and go bust. That would be a really negative response for IT. But I think the banks that will survive will have to spend a lot more on IT to meet regulatory norms. So from a BFSI sector itself, I think we will be surprised by the kind of order flow in the next 2 or 3 years. So it might, counter to popular opinion, be an interesting time to look at IT specifically because of BFSI, not in spite of it.
Okay, that's the IT view, and we've got the banking view. Where's the market? 160 down still. Not as bad as where we were in the afternoon, but weakness nonetheless. Deepak, let me ask you about this. In every crisis, the textbook rule is, people will go and start buying FMCG stocks. That's not happening, not quite to that extent. I guess there's a little bit of lever, ITC play in the market today, but nothing close to what we've seen in previous crises. Your thoughts on FMCG, whether you look at buying anything here at all?
I think they're just too expensive. So, they're probably worth 25 to 35 times earnings. at the way they grow at like Indian population growth rate of 1% plus some price increase. So they end up growing at 8 to 9% if there's no inflation. Sometimes with COVID, they've grown 12, but growth has been high single digits for the most part in terms of earnings. We did a back of the envelope calculation on if you're paying 70 times earnings for a company today, and if it falls to 25 times in 10 or 20 years, that fall to a 25 PE, which is pretty much what FMCG companies in the US get today. In a time when you're still paying relatively high PEs for firms like this, then your earning return on your money, including the dividends that you might receive if they paid out almost all of whatever they earn for the next 10 or 20 years, is 5 to 6% at max per year. So I don't think this is a great play in the long term. In fact, it's only defensive in the sense that you might get your money back, but then the government bond yields are at 7.5%. So they give you a much better return on, almost guaranteed return of capital. So I would say, not really interested in it as a long-term play from a defensive angle. I'd rather buy a government bond. Short-term play as a defensive angle, nothing really bad has happened to India. So I think there are lots more companies available as at a much lower price to earnings ratios. Banks are far cheaper. Non-leverage plays, even in some of the sectors that are starting to get exciting, whether it is manufacturing or railways, defense kind of sectors, they're at far better valuations. And I think the domestic market is more excited about domestic opportunities than they're about the worldwide crisis. By the way, the rupee is not down meaningfully. It was down. It was not. So it's only about 4 paisa more today, right now, than yesterday. In fact, this month, FIIs have been net buyers as well. So I don't think this is a serious crisis situation for India that requires us to run to defensives. Maybe the defensives will now become the offensives. So, we should find other opportunities now.
Point taken, Deepak. Government bonds make better investment than the Indian FMCG space. These stocks are still very expensive. Point taken. Get into a break. Do stay on. On the other side, we'll also invite our Alpha manager for the day, Neil Bahal.
इंडसइंड बैंक सेविंग्स अकाउंट पे मिलता है अट्रैक्टिव इंटरेस्ट रेट, यानी हॉलिडे का मूड बन सकता है। दैट्स व्हाई फ्री एयरपोर्ट लाउंज एक्सेस। बीच में मोटा वॉलेट लेकर मत घूमना। डुओ कार्ड है ना, डेबिट क्रेडिट, आपकी हर जरूरत और कन्वीनियंस के बारे में पहले से ही सोच के रखा है। तभी तो कहते हैं सेविंग्स अकाउंट हो तो ऐसा। इंडसइंड बैंक।
Hello Kia, open the sunroof please. Sunroof opening. Zoom zoom vroom vroom. Zoom zoom.
Open sunroof.
Zoom zoom vroom vroom. And a wee.
Designed so unique, everyone is inspired. Kia, movement that inspires.
For how long will you continue being tensed about the future?
With LIC's new Pension Plus, make your own pension plan because this plan creates market-linked wealth for your future. Moreover, this plan comes with guaranteed additions and also offers various options for receiving pension so that you grow young and tension-free. LIC, har pal aapke saath.
It's time to break free. Break away from the routine to the greens and get lost in the world within. To steer through, to stop, start again, go forth, and just let it all go. With JK Tyre's Ranger 80 for the ones who are wild at heart. JK Tyre, total control.
कब तक लंबी लाइनों में उम्र बिताइएगा? डिजिटल पेमेंट अपनाइए, चुटकी में हल पाइए। पुराने तरीके कब तक अपनाइएगा? डिजिटल पेमेंट बहुत आसान है, देखिए, चुटकी में पेमेंट चुका। बटवा ढूंढ रहे हैं? डिजिटल पेमेंट अपनाइए, कभी भी, कहीं भी, और सुरक्षित। हमने तो इन्हें डिजिटल पेमेंट करना सिखा दिया है। आपने? RBI कहता है कि
डिजिटल पेमेंट अपनाओ,
औरों को भी सिखाओ।
Welcome back. Well, we're not able to drive ahead with regard to that recovery. We went to around 16,945 odd, but from there we're struggling to get past that mark. Though it's a good recovery nonetheless, more than 100 points from the day's low. But besides equities, equity is in a bit of a rough spot. There's a bit of a tizzy, so to call it. But gold has been shining. Gold prices have been moving up internationally as well. Deepak, gold prices have been doing pretty well. Unsure if you have a view on gold, how much of a portfolio it should constitute, but also from an equity perspective, how do you play it? Some of these gold finance companies, Muthoot, Manappuram, both of them are up. A couple of those banking names, like say CSB as well, have seen a good growth in their gold portfolio. Could you play this gold theme via another route? I don't know whether Titan qualifies out there as well.
So thanks, Nigel. I'm personally not fond of gold as a long-term investment, and it does have pockets of short-term interest. Right now, there's so much momentum in it. It's in part of our momentum portfolio as well. So there's such a move. There's such a quick move. But you have to remember that in 10 years, in dollar terms, it was at $2,000 an ounce, I think in 2011 or 12, and now also it's about $2,000 an ounce. So literally you got nothing in the last 10 years if you had invested at the peak, and this is kind of like a peak in comparison to the past. So you might make money in the short term, but you might not make money so much in the long term. Having said that, what do you do if you like it, if you think there's an opportunity here? Gold loan companies are interesting because what happens, counter to popular thought process, is when the gold price goes down, it isn't like they see NPAs. What happens is people are afraid that gold finance companies will sell their gold, and since they've given their traditional gold jewelry and all that, they somehow find the money to pay back the loans early, reduce AUM of gold loan companies, and take their money, take their gold back. And times when gold prices go up, they tend to pawn more gold. So I think this is good for them from a for such companies. However, a lot of their space has been taken over by a lot of banks, some public sector banks as well, so who offer loans at much, much lower rates. For banks who don't have as much of a risk management practice as compared to some of these gold loan companies, even though they're NBFCs, the problem might be that if loan to values are very high on gold and gold prices were to fall, then these banks will take a substantially higher hit in comparison if they were NPAs in this gold process, because banks don't have that close, a depositor base or a borrower base in terms of, connect with the customer as the gold finance companies do. So I'd say if you want to play the gold theme, you should play the gold finance companies, the NBFCs here, more than you should play the public sector banks on this front. Though, I mean, I'll be honest, the size of the public sector banks in this space has gone up nearly 4x or 5x in the last 2 years. So they may be formidable competitors for business in this area.
One of the domestic themes, and domestic is what you like, is Cochin Shipyard. It's been winning a lot of orders. The latest one is for zero emission ships. The stock has rallied 50% in the last 1 year. Is this a stock that you track, you like,
We like it. I think the thing about this business is it's not only getting business from India, it's getting business from outside as well. There is a lot more interest in this because doing some of the activities that Cochin Shipyard does, you need both expertise and you need a lot of time. I think a significant amount of orders will take more than a year, 2 years, sometimes 4 or 5 years also to complete. So they get long-term visibility into their revenue flow. So that way, it's a good company. It's not very expensive. I think in that context, it's a good purchase. But there's always going to be the fear of what effective promoters do here. Which is why a lot of the PSU packs in general tend to get much lower valued. So that's your risk. We like it. I think we own it in some of our portfolios. So there is some bias here, but I think don't expect it to get a huge amount of price to earnings. Always assume the relatively low price to earnings. But if you do that and look at the growth path of this for the next 3 or 4 years, some parts of their order book, just the run to completion may be greater than their current annual revenue itself. So it could be a significant game changer going forward. Of course, assuming that there are no negative news from the from in general the order flow front and from the whether the effective promoter, the government, will do something really silly that they do sometimes tend to do with PSUs.
Okay, all right. Deepak, thanks so much for stopping by and giving us your views on all the stocks that we just discussed. For the Nifty, we have recovered to around 16,950. Let's see whether the 30 minutes, the bulls can drive home some gains. They would like a finish closer to around that 17,000 odd mark. But buying the dip has worked today because you recovered 110 points from the day's low. The bulls will feel they're living to fight another day. That said, let's get straight to Alpha Manager of the Day, Neil Bahal, founder and CEO at New Gen Capital PMS, who joins us. Hi, Neil. Always good to speak to you. Well, the markets are a little bit jittery, but for people like you who are building portfolios for your clients, well, it could be the most opportune time. So a couple of questions out here. One is, what was the cash that you all had, say, a couple of months back? And have you all deployed that cash? And the second part is, you have an interesting thought that investors all over are getting a little bit jittery. But founders of companies, well, they are backing the India story. They are saying a year or two, maybe in fact things will be jittery. But from a 10-year perspective, India is on the way up. Run us through those themes where you see longer term stories pick up.
Hi, Nigel. Thank you for inviting me. It's always a pleasure to be here. In terms of cash, we've been cautious. We had about 15% in cash across the PMS until 2 or 3 months ago. And with that has come down to 4% now. We are deploying over here. And coming to your second part of the question is absolutely perfect. If you see the cement space, about 1 trillion rupees worth of capex is going on currently. If you talk about chemicals, across the board, all of the strong players are doing capex. Even if you see pharma, there's a lot of capex going on. But the investor community is a little bit upset. And that's the thing with Mr. Market. Mr. Market will keep going up and down. It'll behave happy, it'll behave sad. But what we have to do is we have to have a stable approach, and we need to see what the founders are doing. If the founders were also selling shares, then I would say, okay, fine, sell everything and run away. But here, what we are seeing is the promoters, they are pumping in a lot of money into their own businesses. So the question is, do you want to take a view of the next 2 quarters, 3 quarters, or you want to take a view alongside the promoters over the next 4 years, 5 years, 10 years? I think money will be made in India because the GDP will keep growing. Even if there's a recessionary kind of a situation outside, India will still manage to grow somewhat. And even though the stock market may not do good every year, it'll all come back at once after a few years. So our job is to keep doing the SIP, not be too unhappy when the markets go down, not be too happy when the markets go up. Just continue with the game and continue with the flow. Follow the smart money. And the smart money is definitely doing capex right now.
Okay, so you're preaching detachment, I suppose, Neil. Hi, Surabhi here. And that's a virtue, right? If you can do that in life or in your investments, you end up being a happier person, perhaps. By the way, the market's trying to recover pretty well. We are down about 130 points, much better off than the 200-point slide that we had earlier in the day. Neil, one thing kind of caught my eye. Nigel was telling us about some of your investments and the thesis. And it seems that you're still holding a positive view on IT. And that's quite interesting, given that everything that's been happening. There's a 20% cut on the IT index already, and a lot of uncertainty about what happens in the US, banks, tech spending, etc., etc. What makes you optimistic?
So I'm optimistic that IT will be needed. Currently, we don't own any IT stock in the portfolio, not even one. But we are looking at a lot of these. As soon as the valuations come in the range, we will get back into IT. And, a lot of things are going on, especially around AI, artificial intelligence. It's still early days, but if, a lot of people are going to things like ChatGPT, and it's just changing the way people are looking at a lot of things. So if businesses need to survive, there will be a lot of spend on IT going forward. So, IT as a space, I think they are going into a period where there is a little bit of uncertainty in terms of how artificial intelligence will, but my view is that AI will benefit the IT space in a big way. The profitability, the productivity, everything is going to rise. So if the valuations are to keep coming down, all we have to do is say thank you to the stock market, find the stocks that are cheap, find especially things where there could be some special situations where, a struggling IT name gets taken over by a big player. Something or where there's a demerger, delisting, something like that can give you a little bit extra margin of safety in terms of valuations. That could be a way to go.
But you mentioned things like AI, Chat, GPT. I mean, I'm guessing you're looking to then play this through US stocks, or do you see those opportunities in India? I mean, there are very few companies. I remember we had a conversation with the Intellect Design. They're looking at certain smart solutions. But again, then will you look out for US stocks, or would you look out for the Indian players?
No, so what I meant to say is that how artificial intelligence will replace a lot of, or displace a lot of jobs. The repetitive work where you're spending a lot of money on people, those guys will not be needed anymore. So from a company's perspective, their margins are likely to be strong as well, or maybe even rise going forward. So productivity wise, I think a lot of these companies are going to benefit from the advent of AI. So, I mean, AI is one thing, but overall, any company in the world who wants to remain competitive has to spend on IT. So, I think it's a very, very good thing for investors, what is going on, that valuations are coming to a decent level. I still think valuations need to come down more, but it's a good basket approach. You don't even need to do too much. Just identify the IT ETF and just start, doing small purchases of that every month. Will be fine.
Neil, you spoke about promoters being very bullish and optimistic about their markets, but in the last couple of weeks, we've seen so many block deals. Biocon sold in Syngene, you had M&M selling, Mahindra Group selling in Mahindra CIE, Samvardhan Wiring's promoters sold stake in December of last year, Ajanta Pharma sold stake in the company, the promoters there. So in fact, we've seen a lot of block deals where key investors or promoters have actually brought their stake lower. Isn't that giving you a conflicting sign?
Yeah, so investors are different, right? Investors have to sell because their fund cycles are there, or, even financial investors, they have to sell. So I would not consider a big investor like, wanting to sell out of a business. That's okay. But I would be concerned if across the board, if the promoters started selling their shares. So, and yeah, from once in a while, here and there will be some promoter which is selling. But from what largely we are seeing, a lot of capex is going on. And, this is a time to be bullish on India. And not, it's okay. Markets will not always just go up. And whenever markets go down, you need to identify a basket of, stocks, diversify very well, identify where you can get an edge on valuations, and just, stay invested, keep doing SIP. It's a very simple thing to do.
Okay, all right. Neil, talking about a basket of stocks, you have a contra view on pharma. Here in Mumbai itself, most of us have gone through a bit of a flu post-COVID. Some of the children are struggling as well with the cough. I think antibiotic sales must be going through the roof. But from the pharma pack itself, what is the basket you are building? That's your contra trade, right? You believe in the next few years, pharma could come out of nowhere and start performing, which it hasn't done in the last many years. So if you could name a few stocks and tell us the rationale.
So, Nigel, you're absolutely right. During the COVID time, everybody was at home. People took care of themselves. They were not going. There were no kids' parties. There were, people were taking care that they should not catch an infection. So, there were largely no flu cycle last couple of years. No one fell sick. But now, suddenly, if you see across India, you ask, my own children have been sick recently, and I talk to my friends. Everybody is sick, adults, but mostly children. And pollution is there again. You don't need to do something very high level thinking on pharma. Do something basic, as you said, antibiotics. You don't even need to do any channel checks. You don't need to do any scuttlebutt. It's a given that antibiotic sales are up a lot. You can just go and figure out which of the companies are into the antibiotic space, and you can just invest there. Yeah, and if you actually end up doing some channel checks, you'll know that the sales are very, very strong. So I think pharma, this kind of sectors will not remain down for too much time because of lifestyles. The lifestyle choices of people are such that people are going to be in trouble, sooner or later. So I think pharma should be part of the portfolio here. The valuations are pretty decent, and sooner or later the pharma cycle will revive on a complete broader level.
Okay, all right, Neil, got that. We will leave it on that note for today. Thank you for joining in, and you have a good rest of the day. The market is actually having a pretty decent afternoon, and you're finding us say that despite the 100-point fall, because this was a 200-point fall just a couple of hours back. So the recovery is also quite strong, and it's actually gathering some more momentum. So this is not bad at all. We still have 20 minutes to go. We'll take that break and come back, keep tracking this recovery and this move, and also get you some trading calls for the last couple of minutes.
ए लड़की तेरा नाम क्या है पूछने वाले पूछे तो बता तेरी पहचान क्या है तेरा नाम गूंजेगा तो उठेगा एक तूफान हिलेगी जमीन मचेगा घमासान तेरा नाम गूंजेगा जब हर गली हर मकान में फैलेंगी तेरी बातें हर नुक्कड़ हर दुकान में पीठ पे सजाए घूमेंगे तेरा नाम देखेंगे फिर गेम तेरी सब पीठ पे सजाए घूमेंगे तेरा नाम देखेंगे फिर गेम तेरी।
ये है शुरुआत तेरी, अब हर जुबान पे होगी बात तेरी। देखिए पहला टाटा विमेंस प्रीमियर लीग स्पोर्ट्स 18 और जियो सिनेमा पर।
इंडसइंड बैंक सेविंग्स अकाउंट पे मिलता है अट्रैक्टिव इंटरेस्ट रेट, यानी हॉलिडे का मूड बन सकता है। यहाँ इलेक्ट्रिसिटी बिल भरना कहाँ याद रहेगा, इसीलिए ऑटो पे। एंड इन केस वाइफ का बर्थडे भूल गए तो अकाउंट नंबर याद दिला देगा। आपकी हर जरूरत और कन्वीनियंस के बारे में पहले से ही सोच के रखा है। सेविंग्स अकाउंट हो तो ऐसा। इंडसइंड बैंक।
Celebrated with the big, bold, beautiful Nissan Magnite.
पढ़ता है, खेलता है, झूलता उछलता है, दौड़ता कभी कभी दौड़ कराता है, आगे आगे बढ़ता है इंडिया, अमूल दूध पीता है इंडिया।
आप मुझे बचाने आया हो? हाँ, और बताने भी आया हूँ कि निश्चित आयुष लाइफ इंश्योरेंस प्लान में इन्वेस्ट करने पर अगले साल से मिलेगी गारंटीड इनकम पूरे 40 सालों तक। कॉल लाओ, इससे जरूरी कुछ भी नहीं।
दीप शिक्षा का जले, हर बच्चा स्कूल चले, हो सवेरा मिटे अंधेरा एक नया अभियान है, स्कूल मेरा मेरा मान है, स्कूल मेरा मेरा मान है, अच्छी शिक्षा हक है सबका, सबको अवसर एक समान, हर बस्ते में अपना सूरज और मुट्ठी में आसमान है, स्कूल मेरा मेरा मान मेरा मेरा मान है, बन के रहेंगे जो बनना है, मन में ये विश्वास है, चलो कि रास्ता कठिन नहीं, अब चलो कि मंजिल पास है, स्कूल मेरा
पंजाब के सरकारी स्कूल विश्व स्तरीय सुविधाओं से संपन्न हो रहे हैं। आप भी अपने बच्चे का दाखिला जरूर कराएं। बेहतर शिक्षा, बेहतर परिणाम, सरकारी स्कूल पंजाब का मान।
हिमालय की गोद से लेकर केरला के बैकवाटर्स तक हमारे फैमिली ने इतना घूमा कि
हम और घूमना चाहते हैं।
थैंक्स टू माय क्लब महिंद्रा मेंबरशिप, जो मुझे देता है 80 से भी ज्यादा रिसोर्ट्स और 2000 से भी ज्यादा एक्सपीरियंसेस का मजा। क्यों है ना क्लब महिंद्रा मेंबरशिप फैमिली के लिए एक मस्त चॉइस।
Club Mahindra, we cover India, you discover India.
इंडसइंड बैंक सेविंग्स अकाउंट पे मिलता है अट्रैक्टिव इंटरेस्ट रेट, यानी हॉलिडे का मूड बन सकता है। दैट्स व्हाई फ्री एयरपोर्ट लाउंज एक्सेस। बीच में मोटा वॉलेट लेकर मत घूमना। डुओ कार्ड है ना, डेबिट क्रेडिट, आपकी हर जरूरत और कन्वीनियंस के बारे में पहले से ही सोच के रखा है, तभी तो कहते हैं सेविंग्स अकाउंट हो तो ऐसा। इंडसइंड बैंक।
Welcome back. Well, this recovery is continuing at least for now. 16,990, almost looking at a move towards the 17,000 level. So it's a good fight back that the bulls are trying to put up. Mitesh Thakkar is back with us, so let's ask him what to do now. Mitesh, so that recovery rally or that relief rally is playing out. But what do you do I mean, if you went long at the right time, then good. But what's the next move?
Yeah, so I think the bounce back from the lower end of the range is very good. But as I suggested earlier, also if somebody was long, I think, if you're still holding on to long positions, now I think 16,960 becomes a trading stop loss on this spot, which is about 35 points lower. And hope that this rally can possibly head towards the upper end of the range, which is 17,100. So that's the best which I'm looking at in the short term. Having said that, I think FMCG is the sector, which is clearly showing traction and possibly adding a lot of weight on the upside. So have a BTST on HUL, keep a stop below 24.90, look for 25.30 as the target. While Havells is something which I would take a slightly negative call upon, so that's an SCBT call. Keep a stop at about levels of 1182 and a target of 1155 is what you just can look at.
It's now approaching 17,000. So this is turning out to be a very ferocious and powerful pullback from the day's low. It's a 170-point recovery, and Brent crude prices continue to tumble lower. Brent is now at $71.25 per barrel. So that's also positive for Indian macros. Mayuresh Joshi or William O'Neill is with us on the show. Mayuresh, the markets gave a big tumble today. Any stocks which were screaming buys for you in today's fall?
Afternoon, Rima. No, so as far as the market condition is concerned, yes, you're seeing a very, very strong recovery for the markets today. But for a whole host of global markets that we are tracking, the kind of correction that has come through, specifically in the past few days, and the contagion risks that the financial system probably carries with it, carries the risk in terms of more earnings downgrades coming through. So I think 2-3 spaces which stand out in our buy watch list. If the low that we've probably done today, if that holds for the next 2 or 3 days, on the O'Neill lens, we get into a rally attempt. And if we get a strong recovery post that, with the presumption that the Fed probably hikes 25 bips, and the worst in terms of a contagion risk stays behind us over the next few days and weeks, the markets might start showing resilience as we move along. Having said that, I think capital goods stroke infra as a space is where the earnings momentum is expected to remain strong. Government spending has come through expectations in terms of allocation in the budget, abetting order flows, and therefore execution and margins, along with the return ratios expected to improve. So stocks like an ABB close to its pivot levels on the O'Neill lens, stocks like an NCC from the mid-cap space, very, very close to the pivot levels as well. When it comes to cement as a space, again, Rima, I think our entire take is that Q3 over Q4. So I think Q4 earnings can be exceptionally strong for cement companies. Both medium and high growth, the grade coal prices have come off significantly. Freight costs have come down quite substantially for these companies, and therefore the reported EBITDA and reported EBITDA per ton should show signs of significant improvement on a quarter basis. Ultratech within the large caps probably remains on our buy watch list. So I think capital goods, stroke infra, a few of the bar names, and a few of these cement companies appear on our buy watch list.
Okay, all right. Hi, Mayuresh. Mayuresh, HAL, that's been the big outperformer, right? For many, many months, the street was a little bit cautious that there's a government supply overhang that could be there. That hasn't come as yet, but today that's one of the big losers. It's down 5.5% on. Would you be looking to buy into this dip? Because that's been one of the big outperforming stocks from the defense space.
Afternoon, Nigel. No, absolutely. I think if you look at HAL, if you look at Mazgaon Dock as another example, I think these two stocks are appearing in one of the top 50 stocks as we publish our year-end book as well, which have done phenomenally well in the last financial year. Order books extremely strong. The new orders which will come through, specifically in terms of allocation done under the Atmanirbhar Bharat scheme. A few of the chopper orders expected to come through, helicopter orders, LCA, Tejas aircrafts. Repairs is a big part, Nigel, for HAL's entire portfolio suite. And therefore, I think the margins that they are operating out of, the expectations is that with input cost and commodity prices coming off, the margin stability should be seen. So I think for stocks like an HAL or a Mazgaon Dock, they're obviously at late stage basis on the O'Neill lens. We would ideally want them to correct more, probably make a reasonable amount of a stage base as they correct. Because as they correct, I think valuations will become a little bit more reasonable. At the same time, I think it will give an appropriate entry point as we look at on our O'Neill lens in terms of the relative strength of both these stocks.
Okay, got that. Okay, the market's continuing its march towards that 17,000 handle, and let's see if it can get there. Mayuresh, the one island of green in this market obviously has been, maybe not today, but I mean over the last couple of weeks, it's been the capital goods area, right? Capital goods, defense. That's where the orders are coming in. That's where, it's completely domestic facing, so unfazed by what happens in the world. Do you have any stock picks here?
Absolutely. As I just mentioned in my opening remarks, Surabhi, 2-3 stocks look extremely attractive from a buy watch list perspective. You look at the kind of orders that ABB has won over the last few quarters, a mega order of almost in excess of 25,000 crores to be delivered over the next few years. Input costs coming down significantly. What they've probably done in terms of their margin profile with better execution has been clear operating leverage playing onto their balance sheets. And therefore, a combination of a strong order flow coming through, giving good revenue visibility, good execution, ensuring margin stability and margin expansion going forward with input costs going down, ensures the bottom line growth probably persists as we move into the next few quarters as well. The next year, around the same time, so I think we'll be talking about the general elections. So I think a large consensus of the market opinion is that a lot of order tendering will happen over the next 2 to 3 quarters for a whole host of these players. Siemens, ABB, L&T, as I said, NCC within the mid-cap space. I think all of them look very, very interesting from a O'Neill lens and very, very close to their pivot points as well. So yeah, these definitely can be careful.
Do stay on, Mayuresh. Need to slip into a very short break. We'll come back and chat more about the markets and get closer to the market closing as well.
लड़की तेरा नाम क्या है पूछे वाले पूछे तो बता तेरी पहचान क्या है तेरा नाम गूंजेगा तो उठेगा एक तूफान हिलेगी जमीन मचेगा घमासान तेरा नाम गूंजेगा जब हर गली हर मकान देखेंगे फिर गेम तेरी से।
ये है शुरुआत तेरी, अब हर जुबां पे होगी बात तेरी। देखिए पहला टाटा विमेंस प्रीमियर लीग 4 मार्च से जियो सिनेमा पर बिल्कुल फ्री।
इंडसइंड बैंक सेविंग्स अकाउंट पे मिलता है अट्रैक्टिव इंटरेस्ट रेट, यानी हॉलिडे का मूड बन सकता है। बीच में मोटा वॉलेट लेकर मत घूमना। डुओ कार्ड है ना, डेबिट क्रेडिट दोनों, और घूमते फिरते किसी चीज पे दिल आ जाए तो इंस्टेंट प्री अप्रूव्ड पर्सनल लोन सिर्फ 3 मिनट में। आपकी हर जरूरत और कन्वीनियंस के बारे में पहले से ही सोच के रखा है। सेविंग्स अकाउंट हो तो ऐसा। इंडसइंड बैंक।
Celebrated with the big, bold, beautiful Nissan Magnite. डिजिटल इंडिया देखेगा डिजिटल टाटा IPL सिर्फ जियो सिनेमा पे, किसी भी स्क्रीन पे, किसी भी मोबाइल नेटवर्क पे, बिल्कुल फ्री।
What if you were a trendy apparel company facing an avalanche of demand? To ensure more customers can buy more Sherpa-lined jackets, you call IBM to automate your IT infrastructure with AI. Now your systems monitor themselves. What used to take hours takes minutes. And you have an e-commerce platform designed to handle sudden spikes in overall demand, as in actual overalls. Let's create IT systems that roll up their own sleeves. IBM, let's create.
Yes, they're electric. Among other wonderful things. Going anywhere, they will take you far. The fully electric Audi e-tron models.
Friends, I want to share some good news with all of you. Firstly, like always, we have performed very well this time also.
But what will we get?
Secondly, we shall invest in employee benefit.
Come on, now tell us what will we get?
And thirdly, we shall invest in LIC's group funded plans.
Great, we'll get everything. Now, leave encashment, gratuity, and along with pension, our future is secure.
Yes, employees' real benefit lies in LIC pension and group scheme.
Craving Kesar Rasmalai. Ready for a surprise? Vadilal Gourmet Natural Kesar Rasmalai Ice Cream. Itna creamy और rich कि naturally हर दिल बोले वाह वाडीलाल.
Welcome back. Buying the dip has worked today, it seems, from the lows of the day, because we started off with a cutoff of around 100 points all. So we are ending closer to where we started trade. In fact, closing around that 17,000 odd mark, the bulls will take this kind of a close, given the kind of intraday dip that we did see. Mayuresh, final question before we let you go. This sugar theme was playing out very, very well. Sugar prices internationally are moving up. There's an ethanol angle as well. Higher multiples, better valuations is what the street was talking about. Today, some of the sugar stocks are getting hit. Any cause of concern out there? What's your view on sugar?
No, largely, Nigel, if you probably look at the Brazilian production, it's in fact gone down. Our own estimates in terms of production for this year expected to be around 34, 35. Carryover stock has been reasonable, and consumption of 26, 27, including exports and the conversion to ethanol, would still mean that the carryover inventory would be reasonable enough. I think the ethanol play has been fabulous for the sugar companies as a whole, but generally I think refined sugar and raw sugar itself did see some amount of pressure points in last quarter's numbers as well. With the state and general elections looming round the corner, I think what kind of curbs probably come through in terms of both the state and the center, in terms of the SAP and the FRP prices, is something to be looked out for. So clearly watch out for numbers on this space. But from a momentum perspective, I think the oil marketing companies, Nigel, are in a very, very sweet spot at this point of time. Product cracks have started coming down. The expectations in terms of GRM expansion is one of the key triggers for the stock. The second element in terms of diesel and petrol sales expected to be reasonably good because of prices coming down at retail pumps will ensure reasonable amount of volume growth for these companies itself, and marketing margins should start taking a reasonable amount of support from the losses that they had got. And the pipeline consistency is pretty good along with dividend payouts. So I think running a theme from an immediate short to medium term perspective, I think oil marketing companies with crude stays at this level can be one thing to do.
Okay. All right, Mayuresh, thank you very much for taking us through some of your picks and the approach to the market. By the way, there's interesting chatter on online and of course in agencies. It seems some comments have been made. This is AFP reporting that Putin and Xi perhaps will discuss Beijing's proposal to halt the Ukraine conflict, and this is coming from the Kremlin. So AFP reporting Kremlin saying that Russia and China could perhaps look at some proposals that the Chinese have put out in terms of ending the Ukraine conflict. Could explain why people have quickly rushed to cover some short positions, given how deeply oversold markets really are. But perhaps that could be one added reason. I think, Rima, the market can do with any good news, right? In this completely somber sea of negativity.
And it also probably explains why crude prices have actually fallen even further. Now the $71 per handle is broken, right? If the narrative was that demand is improving and hence we are rising, crude prices would have risen. But right now, we've got a situation in which crude prices are falling, but markets are actually holding up. But by the end of it, today's verdict is that 17,000 handle on the Nifty has held. So after rates sharply plummeted in the first half of the trading session, there was a very powerful recovery. The low today was 16,828. So from the day's low, there has been a recovery of close to about 180 points. FMCG names led from the front. HUL top Nifty gainer, 2.5% rally. ITC looking smart. Nestle gaining, closing up in the green. BPCL continues to march higher, 13.5% gain in the month of March itself. And Divi's Laboratory also finding itself up in the green. On the losing side, Bajaj Twins, Finserv and Finance under pressure. Adani Enterprises made plans to halt its capex plans. The stock got a bit punished, 3.5% gone. IT sulked. Banking names like State Bank of India attempted a recovery, but still ending lower. And Hindalco, Tata Steel too, and seeing some steep losses.
Yes, metals have been sold off quite a lot in the last couple of sessions, today being no exception. On the broader market screens, you've got some green names like a Cochin Shipyard, which got an order. RVNL, again, order wins over here. That worked well for some of these stocks. But other than that, it was a real sea of red for the broader markets. So there's no other way of putting it. In fact, if I talk about some of the major losers, you've got a lot of the Adani group names, Adani Power, Adani Ports, etc. Most of those stocks are down. Stocks like Easy Trip, M&M Financials, quite a few of these names on the downside. Nalco, obviously, from the metals arena, losing ground. But on the large cap screen, the bulls had perhaps some reason to cheer because the bears were running to cover their positions. Given that the market's oversold, we perhaps, who knows, we might have a stable session on Wall Street and potential good news on the Russia-Ukraine conflict. So that's trade for today, ending with a cut of just about 100 points on the Nifty, the index climbing back to the 17,000 mark. Well, with that, we wrap up this edition of Closing Bell. Many thanks for watching, but don't go anywhere. A special offering, Global Dialogues, coming up next.
Go Power.